Hello viewers, we'll be going over gold miners ETF ticker symbol GDX. In this video, we'll be using the day-by-day probability model, the technical performance of each model, how we find the models, and the day-by-day forecast for GDX. So back to the technical analysis, today we're down 3% on the 1 hour chart. We are now touching oversold RSI. We were approaching to positive MACD, however we saw a reversal and a divergence on the 1 hour MACD. As for the 4 hour chart, if we extend that further, we're also, or as a 30-minute chart, if we extend up to the 4 hour chart, we're approaching to oversold RSI. We just reached to negative 4 hour MACD, and at the moment we may see temporarily more downside. As if we extend that further on the daily chart, we are now resting on the 18-day moving average, this purple line. However, if we do manage to break that support level, the next possible support that I see is around a price of $30.50. We saw previous resistance around that range back that dated back to April 14th, and as well as resistance back in February 24th, and as well as March 5th. So around that range we may see possible support, and that also coincides with the 50-day moving average, this yellow line. So if we do manage to fall all the way to next possible support, that price movement to the downside is roughly around, I would say, 12%. And as for resistance, if we do manage to reverse higher, we did make a resistance back last week, or May 19th, at around a price of, I would say, $37.41. And to the upside to resistance, that is around 8.4% to the upside. So now let's go to the day-by-day probability model. Again, these models are now available in the link below, so do check it out. So we only have one model and the sample size is very small. So what you see here in probabilities is not statistically significant, so do keep that in mind. So as we progress to the 7th day, we have a 100% chance for gold miners to climb between 2.7% to 5.4%. Again, this is not statistically significant because the model and sample size is very small. So now let's examine the day-by-day forecast for GDX. So we have 1 day out, that will be a Wednesday, and 2 days out would be a Thursday, so and so on. 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So now we compared it to trends. So on the line graph, we have our current trend as our blue line, and overlapping it is a trend in question that we're going to compare it to. So right here we have our current trend, and below is the trend that I believe is the best match, and that trend dates back to July 30th to October 23rd, 2007. So let's compare two trends. So what we have here on the current trend, we start off at the bottom Bollinger Band, reverse higher to touch the upper Bollinger Band 3 times, and then we revert back to the mean to the middle Bollinger Band. So now the trend in question, and again, this trend dates back to July 30th to October 23rd, 2007. So we start off at the bottom Bollinger Band, we reverse higher to touch the upper Bollinger Band 3 times, and we revert back to the mean towards the very end. And one thing to note, the trends are similar but not identical. So on the current or trend in question, we did manage to touch the bottom Bollinger Band. Compare that to the current trend, we were near it but not quite touch it. So do keep that in mind. So what we have here is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's a reason to believe that if the trends and patterns are the same, the forecast and outcome should be fairly the same. So the model that we just examined, it was up roughly around 4.4%. So back in July 30th to October 23rd, GDX was up around 4.4%, and that coincides with this standard deviation right here. So now let's examine closer on the technical performance of each model. So on the current trend, we're down, say, roughly 8% from monthly high, up 45% from monthly low, down 3% from 10 simple moving average, down 71 basis points from 20 simple moving average, and down or up 15% from 50 simple moving average. So now the trend that we just examined, it was back then it was down 3% from monthly high, up 26% from monthly low, down 68 basis points from 10 simple moving average, up 1.7% from 20 simple moving average, and up say 11% from 50 simple moving average. There are slight technical differences among two trends. Is around the 20 simple moving average, and our current trend, we were down 71 basis points. Compare that to the trend in the past, it was up 1.7%. So again, these models are now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.